Welcome to RPRA's consultation on the proposed 2026 program fees for electronics, lighting, and batteries. My name is Julia, and I'm a communications advisor here at RPRA, and I'll be your moderator for today's session. In this webinar, we will communicate the proposed electronics, lighting, and batteries registry fees in 2026 and how RPR develops those fees. We'll be pausing during the presentation to answer questions, and we'll take more questions at the end of the session as time allows. To ask a question, please use the Q&A tab. Type your question and hit send. Everyone can see the questions and you can upvote any question you want us to answer first. We'll do our best to answer as many questions as possible during this webinar, but if you don't get to your question, please email it to consultations@rpra.ca. Please note this session is now being recorded. The recording and presentation slides will be emailed to everyone here and will also be available later today on our website and YouTube channel. Now I'll hand it over to Stacey Bowman, Manager of Policy, Research, and Data Analytics here at RPRA to start the presentation. Thank you.
Thanks, Julia. Morning, everybody. So we are kicking off with just a little bit about RPRA. Some of you on the line may be new to us. So we are a regulator mandated by the Ontario government for the Resource Productivity and Recovery Authority. We support the transition to a circular economy by enforcing the producer responsibility framework under the RRCEA, that's the Resource Recovery and Circular Economy Act, and also by winding up some legacy waste programs under the Waste Diversion Transition Act. We are also mandated to provide digital reporting services, registries, for the province's excess soil and hazardous waste programs, which are under the Environmental Protection Act. But we do not have regulatory duties over those programs. The compliance activities for those programs are handled by the ministry. Our third pillar of our mandate is to publicly report on the progress towards a circular economy in Ontario by reporting out registry data. Just a note, we are an administrative authority of the Government of Ontario. That means we don't receive any government funding. We have no other sources of funds to fund our operations other than through fees that are charged to regulated parties and registrant users of our registries. That is the way we recover our costs to deliver our mandate through operations every year. And we'll get into how those fees are set. So what you're going to see today is a proposal to show you what we propose as the fee models and rates for 2026 for the electronics, lighting, and batteries programs. As always, we are proposing these in advance of when they will apply. They would come into effect in 2026. Final fee rates will be posted to our website by December 1st, and that's 30 days in advance of when they will take effect. And our 2026 budget and business plan has been finalized and is now live on our website. Our fees are derived from the budget that is explained in that business plan, so I encourage all of you to take a look. It's fascinating reading. And we will be presenting some key financial information from that business plan here in our slide deck that will provide you with the context that you require. But if you want all the fascinating details, then definitely check it out on our website. So we are required by the RRCEA to consult every year for at least 45 days on our proposed fees for our registry programs. So we began this consultation on September 29th, and it will end on November 13th. During that consultation period, you can send questions or comments, written feedback of any kind to the email address you see on the screen there, consultations@rpra.ca. Send us feedback anytime up until November 13th, the close of the consultation. And we will write a consultation report that will also be posted to our website that will include all of the feedback we've received and explain how we considered that feedback in finalizing the fees. So that consultation report will go up on or before December 1st along with those final fees, and you'll be notified of that posting. We have a lot of information, all of the information we're imparting today, as well as other details on our consultation webpage. So you can check that out as well. So I spoke a bit about how RPRA is a cost recovery organization. So no other funding other than the fees we charge to our registrants and regulated parties. So we do have three sources of those fees. We have producer responsibility program registrants. So these are the fees that we charge to producers under the RRCEA who are required to register and report to us. We also charge fees to parties obligated to register and report through our excess soil and hazardous waste program registries. And then we also recover costs from industry funding organizations under the Waste Diversion and Transition Act. Very little fees are now brought in through that third revenue source, as those programs are almost entirely wound up at this point. So our fees support all of our operations as a regulator and the delivery of our mandate, which we represent with these 5 overarching deliverables. We develop and maintain registries through which people can fulfill their reporting obligations. We operate those registries and provide support to registrants, customer support via email and phone, and sometimes by webinars or presentations. We also are responsible for the compliance and enforcement of resource recovery requirements under the RRCEA, of course. We are also responsible to publicly report registry data and to report on our own compliance activities, which we do through our website. And we are also responsible for oversighting the operation and windup of the legacy waste diversion programs, and as mentioned, those industry funding organizations under the Waste Diversion Transition Act. So the fees support all of these sort of big buckets of operations. A little bit about our approach to fee setting and the main inputs into that process. These are the same inputs as previous years. So we have 6 of them, as well as a board-approved general fee setting policy, which is available on our website that provides overall guidance for setting fees and principles to consider in the methodology that we apply to set those fees. So the 6 main inputs are, of course, first of all, the annual budget. So this would be the 2026 annual budget and the 2026 business plan. That's the big bucket of funds that we need to recover over the course of 2026. Then we have a cost allocation methodology, and that guides the allocation of the overall budget to the different programs that we operate, all the producer responsibility programs, as well as hazardous waste program registry and the excess soil registry program. Thirdly, if we have any surplus funds that are received from the windup of industry funding organizations, we apply those to a program's budget. You're going to see that that is the case for electronics. Fourthly, there may be an adjustment to the recovery target for a given program that derives from a previous year's deficit or a previous year's surplus in that program. We have a fee model for each program, and the fee models determine how and what all the fee payers within the program are charged. And then we also apply estimates of the number of fee payers we expect to have and the volume of materials supplied for each program. And all those things combined go into the hopper and a fee rate comes out. And we'll get into the details of that as the presentation progresses. Just a note that in 2027, there's going to be a 7th input into the fee setting process, and that's potential adjustments if there are any administrative penalties collected from regulated parties in a given program. So you can find out about all of these inputs and the overall cost allocation methodology, all the fee models and the fee setting process on the fees webpage on our website. There's a lot of good plain language content there to help you understand this process. So I encourage you to visit that if you're not familiar with it at this point. a little bit of a Coles notes here for you on our cost allocation methodology. So just as a reminder, we have the total budget. That's the big bucket of funds that we have to recover from fee payers in all of our programs. But then we have to allocate that big bucket amongst the different programs that we operate to fairly recover those costs and to avoid any one program subsidizing the cost of another program. So with this methodology, we have two overall categories. One is direct costs. So those are costs that are attributable to a specific program. Some of those direct costs could include the amortization of startup costs of a given registry portal. It could include foundational costs to start up that program or technology solution. It could include professional fees for services that are only servicing that program or other information technology expenses that, again, just apply only to that program. Common costs are the other big bucket, and those cannot be directly attributed to a program because they're either indirect or they're a shared service. So they are something that all the programs pull from. So these common costs are divided amongst the programs using cost drivers. And a key cost driver is the number of registrants and the number of producers in each program. So common costs could include indirect costs like the payment of our board members, amortization that's not related to a particular program portal on the registry. It's certain staff salaries, and also things like office supplies, which everybody needs to use. There's also shared services, such as, again, certain salaries and benefits, technology services that apply to all the programs, and software licenses. There's also, in each program, budgeted annual contribution to our contingency reserve fund, and that's allocated to each program based on that program's share of the total budgeted cost recoveries. And again, more details about this can be found on our website on our fees page. So that's
Yeah.
the first bit of dense information that we have for you this morning. So we're going to pause for a minute and see if there's any questions from the group.
Stacy, maybe I could just help by if folks are interested in learning more about how we set fees, because we do get a lot of questions about like our methodologies and how costs are attributed to each program. That fees webpage is found on our website under the Learn header. So there's a drop-down menu on our landing page that says Learn, and under that is I believe it's called How We Set Fees, and there's a whole page dedicated to elaborating on this information if folks are interested in learning more.
Perfect. I don't see any questions coming up just yet, so that's okay. So we can continue on. So now I'm going to hand it over to Cam Perrick, who's RPRA's Director of Programs and Stakeholder Relations.
Thanks, Julia, and thanks, Stacy. Um, so I'm going to cover a little bit more information about our 2026 budget, which has been finalized since end of September and was just, as Stacy mentioned, published to the RPRA website today. So if folks are interested in reviewing in further detail, please visit the website to have a look at that document. It should be a banner message, so easy to find on our website right now. But all the information I'm going to share comes directly from that business plan. And we'll start every business plan the RPRA produces starts with our strategic plan. So our strategic plan, which was consulted on and finalized last year, provides us with our goals and objectives that help us to meet our mandate. And those are once again highlighted in this year's business plan. Our five strategic goals include delivery of accessible registry services that provide value to registrants, effective enforcement that supports waste reduction and a healthy resource recovery sector, a trusted and useful public information source about resource recovery, waste, and RPRA activities, and then looking inwardly to make sure that, we have the right folks and systems to support you. We want to ensure a connected culture where employees can grow and do meaningful work, and ensuring that we have robust internal systems and processes that remain innovative and adaptable to change. And all of our key planned activities, our key performance measures are kind of driving us towards the delivery of these five strategic goals. Okay, now right into our budget as it compares to last year's budget. What we see is an increase in the RPRA budget by 9%. We've shared the budgetary increase or investments by program areas. In terms of the producer responsibility programs, the RRCEA programs, we're seeing an increase, which is largely driven by an investment in our Blue Box program. And this investment is a direct cost that will be borne by the Blue Box program registrants alone. So that's driven, that's a $2 million of the 2.63 million increase is directly related to these new investments in really it's we'll get into it in a future slide, but it's investment in building out RPRA's audit and verification processes or framework to support the needs of the Blue Box program. Now, what we also see is a slight increase in the budget related to our digital reporting services, and this is driven largely by the level of effort involved with supporting Ontario's Hazardous Waste Program or HWP program. However, due to the forecasted increase in activity related to that program, we're actually seeing no fees increase there. So, a little bit more required to support that program in terms of cost, but also anticipating more activity to ensure no impact there on fees for those registrants. Now, of particular interest to this group, what we're seeing is a decline in the level of effort related to oversighting the windup of Ontario's legacy waste diversion programs or our WDTA programs. We do our business plan and budget does anticipate that Ontario's former waste electronics or WE program operated by OES and Ontario's used tire recycling program operated by OTS will be winding up in full and being terminated through 25 and 26. And I think folks are all familiar with the windup of the Blue Box operationally, at least. It's happening at the end of this year. And through 2026, we'll be supporting the corporate liquidation of, or at least oversighting it, of Stewardship Ontario. So what we'll see is, with the decline in revenues coming in from the WDTA programs, there is a shift over to the other RRCA programs that have to take up the share of RPRA's budget or a greater share of RPRA's budget with that revenue source declining and eventually going away as of 2027. We don't anticipate that the WDTA programs will be around and therefore no more revenues to draw from that program or those sets of programs. In terms of our expense line items, just highlighting, I'm not going to go through every line, but just highlighting some of the more significant changes year over year. Mainly it's salaries and benefits, and as I mentioned, it's related to the human resources we need to bring on to support the Blue Box program, specifically supporting audit and verification of Blue Box data. And the other piece that I think is worth highlighting is our reserve recovery is declining. So we're not going to attribute or collect as much as we had last year related to maintaining a healthy operating reserve, and that's really in response to the challenging economic environment. And this is a lever that we can pull to help reduce fees impact. So, we continue to maintain a healthy operating reserve, but we're contributing less to it in 2026. Now, just again, visualizing that financial table we just shared, majority of Ripper's expenses are in people, salaries, and benefits, followed by our technology solution, which is registry and IT costs, which are the portal builds and maintenance of those portals to make sure that they are helping you fulfill your reporting and compliance requirements, and helping us in terms of compliance and enforcement and data analytics. So in our business plan, we describe all of the key new planned activities for 2026. If you'd like to go through those key planned activities in detail, we encourage you to have a look at our business plan. But we've pulled out a selection of activities that are kind of the bigger things we plan on doing in 2026 in order to fulfill RIPRA's mandate. First being the build out of the audit and verification framework for the Blue Box program. That's the most significant new activity that RIPRA is taking on next year. As part of the support to the Blue Box program, we plan to conduct a material deduction study to support Blue Box procedures and regulatory requirements. And this is largely due to or in response to the regulatory amendments to the Blue Box reg that took place earlier this year, that were finalized earlier this year. We plan to increase accessibility and impact of publicly reported registry data for registrants and the public. So really just, building out one of the third main pillar of our mandate, which is making information about Ontario's resource recovery programs more accessible to the public and to our registrant businesses we know who find great value from accessing that information in a timely manner after it's reported and verified, reported to us and verified by RPRA. We'd like to get it out as soon as possible. We're also hoping to operationalize the Canadian EPR Regulators Forum, which is a way that that Canadian regulatory authorities or oversight bodies work together with one another in support of greater harmonization and information sharing. With the ultimate goal of burden reduction for registrants who are obligated across multiple provincial programs. We plan to review our registry procedures to identify opportunities for operational efficiencies, and we need to set aside a contingency amount in response to any Auditor General recommendations that come out from the Auditor General of Ontario's performance audit that's currently ongoing. We anticipate those recommendations to be received later this year, and our response will be implemented through 2026 and beyond. So just this is the kind of the next stage of what Stacy laid out is once we have our budget established, how the budget is broken down by program. So as you can see, our largest program is our Blue Box program, which picks up the greatest share of RPRA's budget, followed by our HWP program, and then the other programs, are allocated in order to or in proportion to the level of effort involved with supporting each program. Now, application of program surpluses. Stacy mentioned this next step in the setup slides. From year to year, each program may have a surplus or a deficit based on, all of our fee setting is based on estimated volumes or waste generated or soil moved off site. If we end up collecting more than we estimated, we'll have a program surplus. And in each year, this is a lever we can pull to help either provide fees relief or help stabilize fees as we slowly apply a program surplus to its program revenue requirement. So this table, I'll draw the attention to the batteries and ITTAV. As we can see, there's a plan to let's see, how much of the surplus are we planning on applying? It's is it 480,000 across the two programs this year, Stacy? Am I reading this table correct? Yes. And then in the lighting program, as you can see, there's quite a large surplus remaining, and we plan to apply 200,000 to that. And we'll in future slides we'll show how that impacts the overall fee rate for those programs. Okay, just in terms of the program allocations and the recovery target. So the program allocation, just to help explain this table. Each program's allocation is a share of RIPRA's budget that each program picks up before we apply any program surpluses or amounts that we feel we need to recover to address a deficit position of a program. So for batteries and ITTAV, this year's program allocation is 3.3 million. And then following the application of the $480,000 in program surpluses, we have a recovery target of 2.8 million for the batteries and ITTAV program. And for the lighting program, the program allocation is just under $1 million following the application of $200,000 in program surpluses. We have a program allocation for lighting of just under $800,000 for 2026. Now we'll go through our fee model, which is RIPRA's proposal for how we break down that recovery target and how it translates into a fee rate paid by registrants. So just in terms of the breakdown of the electronics and battery program revenue requirement, we're seeing very little in direct expenses. Stacy explained off the top. If any program incurs, a registry enhancement that's perhaps specific to their program or professional fees or a project specific to that program, only those program registrants would pay for that. So for this year, no change, very small amounts in direct expenses related to the program. However, in terms of indirect and shared expenses, the program goes up. The program allocation increases largely due to increase in our budget, as well as the shift of the WDTA, the decline in WDTA revenues shifting over to the RRCA in the amount of $700,000 in total, which is, that piece is picked up by each of the RRCA programs. Each program pays a share of RIPRA startup costs and a reserve contribution, which, as we noted, is declining. We're choosing to recover less related to the reserve contribution this year. And then you have the surplus of 480,000 that's applied to further reduce the program allocation to give us a recovery target of 2.85 million for the electronics and battery program, which overall is a fees increase year over year by 16%. Now shifting to the lighting program, same thing, almost very small amounts of direct expenses and almost no change year over year related to this program. Similar to the batteries and ITDVA program, the lighting program picks up a bit of the budget increase and the shifting of costs from the WDTA over to the RRCEA. The program share of RIPRA startup costs and reserve contribution is also declining quite a bit, but in real dollars, just by about $10,000. The total cost to be recovered or its program allocation is $1 million. Once we apply the program surplus of $200,000, you have 0.79 million in revenue requirement or a decline in fees for this program of 14% compared to last year's revenue requirement. So into the fees. The fee model for our RCEA programs remains unchanged for 2025, which means we're going to continue to charge a nominal fixed flat fee for the small producers, which is a program-specific supply threshold. So each program has kind of a small producer and large producer number by which if you report that you supply under that threshold, you qualify as a small producer, and if you are over that threshold, you are a large producer, and you will pay a variable per kilogram or per tire rate if you're in the tires program, but a variable per kilogram fee rate. In terms of our general fee setting principles outlined in the general fee setting policy, which is available on our website, our fee model, follows two main principles. One is equity. This protects small producers and registrants from excessive burden, and ensures large producers and registrants pay fees that reflect the relative quantity of material they supply into the Ontario marketplace, and ensures that no producers have a competitive advantage on a per product basis. We also strive for simplicity and predictability. So the per kilo unit, per kilogram, the kilogram per unit variable fees are aligned with our regulatory requirements for producers to report by weight or by unit if you're in the tires program, and enable revenue estimates based on estimates of future supply volume. So again, we know that having or understanding RPRA's fees, and understanding what those fee rates are going to be year to year is important to you when setting your own business's budget, and how much you expect to pay to comply with the Ontario resource recovery programs. So, that's why we have those levers that we share with you, which are the application or the choice of how much to apply in program surpluses or deficits year over year. One of the drivers behind those decisions is predictability. And we are always striving for simplicity to help you understand how the fees are how we make our decisions on how we're recovering our costs through fees. Okay, so this is a little bit different this year. Here are the fee rates for electronics and batteries. What we are showing is last year's 2025 fee rates for the small producers flat fee and the variable rate producers. Because of the transfer of the OES, Ontario Electronic Stewardship, which is the IFO that operated the legacy WE program, had quite a large surplus at point of wind up or operational wind up, and the wind up plan instructed that those funds be transferred to RPRA to offset future ITTAV registry fees. We've received those funds, which are being held in a segregated account, which will be the amounts remaining will be continue to be reported on in our annual report until exhausted. But this will be the first fee that we're able to apply some of those surplus funds to zero out your ITTAV oversight fees. So there'll be no fee for both categories, and you'll receive once you do your report, you'll receive a covering letter that indicates why you have no fees this year. So I'm just going to read the slide to make sure I cover my bases here. So no fee will be charged to the electronics producers through the application of the 2.6 million. So that's your recovery target or your program's recovery target for 2026 of OES surplus funds to fund the electronics program's share of the 2026 revenue requirement. If this funding was not available, the 2026 ITTAV program fee would have also increased by 19%, similar to the batteries variable rate fee. So over to batteries. As you can see, the small producer flat fee is increasing from $95 paid in 2025 to $100 in 2026. And the variable rate is going up by 19% from 3.3 cents per kilo to 4 cents per kilo. Now, just a little more information in terms of so we talk about what's driving the budget, but we have some information that to share that explains what's driving the fee rate increase. So for the electronics and battery program, what we're seeing is an increase in the program allocation of about $250,000 that causes a swing to the fee rate. We have a decrease by 3.2% in terms of the amount of material we anticipate will be supplied or reported as supplied to market. We have a decrease in the surplus amount applied to reduce fees. And we have a projected I guess it's just flat in terms of the total number of small producers. So we don't anticipate an impact of, small producer businesses shifting into that large producer category. We're going to anticipate same levels of small producers versus large producers in 2026. And all of that leads us to a 19.4% increase in the electronics and batteries fees compared to 2025. Now, shifting to the lighting program, similar, or this is across all our RCA programs, but the flat fee paid by small producers is increasing from $95 per year to $100. And what we're seeing is a no fee rate increase in the lighting program from the 19.3 cents paid per kilo in 25. That's remaining stable through to 26. Now, what we saw is, the program allocation decreased, but we also are seeing a decrease in supplied volumes of lighting, which means although the the amount being that we anticipate it costs to support this program is decreasing, but we're also seeing decreases in supply, which means less producer volume is able to pick up that cost, and that's resulting in basically no impact. So as you can see, the program allocation um, increase slightly, nearly flat, and then the estimated supply volume is decreasing significantly. We anticipate a 16%, or the impact is the impact of that from I'm going to go back to the previous slide. So we're anticipating a decrease in the large producer supplied volume, 14.1%, but the impact of that decrease is a 16% decrease on fees. Anyways, all of that washes out to make it the fee rate no impact, so it's staying stable year over year. I'm sure folks have questions, and we'll get to them in a moment. But before we get to those questions, we just want to provide some other updates. They're not for consultation, but we've got the right audience here just to share some updates related to billing and payment. So as of January 1st, RPRA will be implementing late fees on overdue invoices. RPRA's fee schedule states that RPRA may levy a monthly 1.5% administrative charge on late payments. Historically, although we had the authority to charge late fees on invoices, we have not yet we had not been charging them, but we have now built out the functionality in our registry and our finance systems to begin charging that fee, and we will do so effective Jan 1, 2026, and we'll be communicating that on your invoices beginning next year. So just some other enhancements we've made recently that are planned to launch later this fall in November. All of these that I'll list out, really they're in response to registrant feedback. All of them are striving towards making it easier for our registrants to pay in different ways, whether it's flexibility in payment method or flexibility in how you pay your invoices. So what we've done is we made improvements to make it easier to view and pay your outstanding balances and request refunds for credit balances. So that's a UX improvement. So hopefully when we launch, when you visit your registrant portal, it'll be much more clear how your outstanding invoices are listed out, and you'll have the ability to pay all of them at once in a single invoice or choose a few to pay at once, depending on the needs of your business. You'll have the ability to designate an accounts payable user, so meaning making it easier for the person in your business that's responsible for paying these invoices to be notified that there is a RPRA invoice ready for payment. So they'll be you can list their information in your registrant account. Again, just hopefully eliminating a step and making it more efficient for your business to pay these invoices. We've also enabled the ability to save a preferred payment method to make it easy in the future for you to pay your invoices. We'll also allow for direct debit payment method. We've heard that that's an option that was, registrant businesses wanted that choice to pay their invoices by direct debit. And we've also enabled the ability to enroll in manifest auto pay. So that's more for the has waste program where the invoicing frequency is on a monthly basis. But many of your businesses might also be involved in the HOEP program and find that useful. Okay, so just before we get to some questions, I want to remind folks that we really do want to hear your feedback on this proposal. If you do have feedback, in addition to questions you asked today, if you want to submit a formal uh, letter to RIPRA, you can send that to consultations@ripra.ca, or if you want to just send us any questions you might have that helps inform your formal submission, send them to that email address. So all of our feedback that we received during this consultation period will be considered in our decision-making process, as well as being captured in our consultation report, which will be published following the final decision on Ripper's fee rates. So once we announce the final fee rates in December, we'll also be sharing the consultation report, which we posted to the consultation webpage for this consultation, and all folks who participate in the consultation will be notified of the availability of the final fee rates as well as the consultation report. And just a reminder that the consultation period runs to November 13th, so please provide your feedback ahead of the close of the consultation. Before we get to some of the questions, I'm going to hand it back over to Julia, who's going to launch a quick survey.
Great, thanks, Cam. So just before we get into the Q&A, I'm just going to launch a quick poll. I'll put that up right now. So we include this in all our webinars to gather your feedback and help us improve future webinars. So the poll will stay open until the end of the webinar. So please take a moment to respond when you can. So I'll deploy that right now. Perfect. So I'll just hand it back over to Cam and Stacy to get to any of the questions that you might have.
Okay, I'm going to take the first question, and before I even answer it, I'm going to just flag that this is quite a bit out of scope of this webinar. Nonetheless, the question from Peter, and thank you for the question, it's will members, and by members I think you mean producers, be able to provide feedback on the proposed verification processes for Blue Box? Um, so I think the first thing I'll say, because folks on this call might also be Blue Box producers, is that the performance audit requirements for producers for the Blue Box program um, have been waived for 2026, so that's not required. And I encourage you to have a look at the Blue Box page and the associated compliance bulletins and registrar statements related to that announcement. But in terms of how we build out our audit and performance framework, I would say we do engage with our stakeholders via producer associations quite often to help inform our decision making. And although I don't believe we're going to be formally consulting on how we build out the audit and verification process, we're always interested in learning more about the registered businesses to help inform, how we ourselves audit and verify their information reported to us. So I think more to come on that. I'm not on that team, but I do know that we will be, as always, engaging with our producer businesses as we continue to support and enforce these programs. And Peter, if you want to learn more, I encourage you to send registry@ripper.ca a message if with any questions you have about verification processes for Blue Box. Okay. Next question is from Jay. Thanks for this question. So, what is the total impact of applied administrative fees, the seventh input you flagged for ITTAV in 2026. So the seventh impact, I believe by administrative fees, you mean administrative penalty revenues. And maybe you can type in, am I getting that right? Is that what you're referring to, the APs? And penalties, yes. Okay, got it. That's what I thought. So when we apply AP revenues, which we have collected some AP revenues in 2025, they're not applied until 2 years following. So they'll be applied to the 2027 fees, which we'll consult on in 2026. So hopefully that helps to answer your question. That's actually captured in our, I believe, in our AP revenues policy, which is posted to our website. That also describes what RPRA will do with AP revenues. So have a look at that. That's in our, I think, in our corporate documents drop down on our main landing page. Okay, Stacy,
Yeah,
the question about late fees, do you have any? I think that's important. Like, how will late
yeah,
fees be
sorry.
accounted for?
I typed an answer and then it disappeared for everybody. So sorry about that. If you can see the answered panel, you can see my written answer there, but I'll give a verbal one as well. So um, late fees are separate from administrative penalties. So administrative penalties are consequences of compliance infractions, and they're an enforcement tool. An administrative penalty levied to a producer, it's definitely going to be more than a late fee. And and that is what we're talking about as an additional input in terms of our 2027 fee setting process. Late fees, it's like think of it like a library, fine. It's a fee that would be tacked onto a registrant's regular RPRA fee as a result of not paying that regular fee on time. So a certain percentage would be added to the fee and tacked on as a late fee. Those late fees have no impact on budgets because they're going to be small. Hopefully they'll be very small because nobody will be late. But they're not an input into the fee setting process, whereas an administrative penalty amount coming to RPRA potentially would be. So just two different things there. Hopefully
And we
that
don't we
answers your
don't set
question.
any targets or make any estimates on what we think we'll collect related to both APs or late fees. And any late fees related to invoices will just collected, sorry, will just contribute to that program's cost recovery amount or their contribute to their revenue requirement by program.
Another questions come in. Just read it aloud. Is there a specific approach taken in determining how much of the surplus to apply in a specific year? With the extensive lighting surplus, it would seem that a larger allocation could be made this year to reduce fees. Additionally, for the remaining surplus, are those funds accruing interest or earnings that will benefit the lighting program? So I'll take these one at a time. So firstly, is there a specific approach? We do take a specific approach to determining fee rates. I mean, we apply the model. We also, in terms of deciding whether to apply a surplus or try to recover parts of a deficit in a given program budget, we think mainly about trying to keep fees predictable, which is one of our fee setting principles. So we did apply a pretty hefty amount of surplus to the lighting budget this year, which did result in a decrease in the lighting fee rate for the per kilogram lighting fee rate. For sure, part of this consultation is for us to hear from you on whether or not the application of that amount of surplus, in your view, is the correct amount. There could be more applied, there could be less applied. So if you feel that there's a case to be made for applying more, you can certainly submit that comment to consultations@ripra.ca. Because you're right, if we allocated more of that, then it would reduce the fees further. For the third
Stacy, just
question,
before we
yeah,
go on,
yeah,
just to make a correction, it didn't reduce the fee rate. We actually held the fees stable. So there's no fee rate
sorry,
change for lighting.
my bad. I'm thinking of the revenue, the overall requirement, I think went
Yes.
down. So again, um, our aim is to hold fees as steady as possible. So by holding back some of that surplus for application in future years, we're kind of hedging that will help. If some of these other inputs resulted in a fee rate that would have increased, we still have this surplus to bring it back down and keep it level, hopefully, or to keep the increases and decreases very minimal as we can. And the third part of your question, good question, by the way. The remaining surplus, are those funds accruing interest or earnings that will benefit the lighting program? I have to take that back to our finance team. I'm not on the finance team, and that's a pretty specific question about accounting. But we can get back to you, or if we receive some information from our colleagues before the end of this webinar, we can get back to this question. But hopefully I answered the first two parts satisfactorily. There's still some time left, so maybe we'll just give a few more minutes for people to submit questions.
We also acknowledge this is a lot of information. Our fees proposal is dense. We also have just released the business plan today, so folks might still be thinking about or absorbing the content. And as we noted here, if you have questions about the proposal, we encourage you to reach out. Happy to answer them. It, and we do, the consultation period is a full 45 days. So folks do have until November 13th to think about any feedback you might want to provide and submit them to us formally. And if folks are involved in any other RRCEA or EPA, Digital Reporting Service programs, we're also hosting program-specific webinars for each of the other programs throughout the next 2 to 3 weeks, where we'll detail any changes to revenue requirements and fee rates related to those programs. So you can find all the registration links on our consultation page if you, say, are also involved in Blue Box or HSP or tires. Okay. Another question's come in. Thanks, Artie, for the question. It says, salaries and benefits are a big portion of the RPRA expenses. Is there any transparency or disclosure on it? Yes. So we do have a compensation disclosure policy, and RPRA salaries over a certain threshold are posted, including benefit amounts similar to kind of the Ontario Sunshine List, are posted to our website under corporate documents as well. So you can have a look if you're interested in that information. Okay, we've got another question. Thanks, Jay. So, can you speak more to the Canadian Regulators Forum? Is RPRA leading this? Who are the other members? And is an equal allocation of costs? A little early on this one, Jay, but I appreciate the question. This is part of our 2026 business plan to operationalize the Canadian EPR Regulators Forum. Even in advance of creating a formal venue for the EPR regulators to work together, we're already working with all of the jurisdictions across Canada to share information, to talk to one another about our compliance and enforcement approaches, to identify opportunities to harmonize where we can, whether it's with fee setting, timing of reporting, formats of reporting, definitions. There are lots of opportunities present. We don't need the forum to be launched in order to talk to one another. So we're doing that all the time. But in terms of the formal members of that group and when it's going to be launched, I'm just going to say stay tuned. That's part of the 2026 business plan, not quite ready for that. Hopefully that helps, but it doesn't really fully answer your question, but you're just a little early on that one.
Jeremy, you've followed up here just with a larger discussion about the revenue requirement for lighting going down by 14%, which is true. But there's some indirect and shared costs for the overall organization that have gone up, and lighting takes a share of those. And you're saying, but with only 3% of the overall budget stated as increasing primarily due to Blue Box, it's hard to follow how those dots connect to flat fees with a substantial surplus assigned. It is hard. It is hard because what's happening is like this input is causing it to go up, and this input is causing it to go down, and then it goes up and down and down. Like there's it all they all have downward or upward effects on the revenue requirement, and then again there's an input at the fee model level that has downward or upward effects on the actual fee rate, the variable fee rate, primarily the number of producers and the volume. So the flat fee is largely, maybe we can go back to the fee rate slide, Cam, where we show the pressures on the fee rate itself. Yeah. So the biggest factor in getting to no change in fee rate is the surplus that we've applied to the budget this year to ensure that we can keep that fee rate flat. Because you can see there's a bit of an increase to the program allocation. That's to pay for lighting's share of the indirect and shared service costs that have gone up according to our budget this year. There's also upward pressure on the fee rate from a lower supply volume, just a general trend in a decrease in supply volume of lighting in the program. So that surplus essentially zeroes out that upward pressure on the fee rate, and that's how we end up with no change. So it's all in the surplus, a lot of it anyway.
I can
And
layer
then,
in a few other things,
sure,
Stacey. The
thanks, Cam.
lighting program is a new one. So as the programs continue to mature, we get more reported data to help us with our estimates. And as our estimates get better, because we have more historical data, we will likely not have to shift year to year what we think the number of producers and supplied tonnage will be. So that'll become less of a factor unless something changes in the marketplace, unless people stop using lights for whatever reason. But
Or they become
really,
lighter.
big part of this consultation is, where we're interested in feedback is, do you need a bigger break in your fee rate? And for this specific program, we have that lever that we could pull. The program is sitting on a rather large surplus. And if this regulated community, through their feedback, feels that they want their fees to go down by using more of the surplus this year, it also means less of the surplus to use in future years to help smooth out the fee. But if that's the feedback you have, we'd like to hear it. And that is something that that's a change we could consider making. Hopefully that helps. All right, we're at time, and we're standing between you and your lunches. So, Julia, do you want to? We don't have any more questions, so maybe you want to close this out?
Yeah, that'd be great. Thank you. So thank you, Stacey and Cam, for today. And everyone that completed the poll, thank you very much. As you know, the presentation and slides will be available later today. So again, thank you for joining us and have a great day, everyone. Thank you.